Hello, welcome to a brand new trading week ahead for the week of 15th of Feb to 19th of Feb 2021. So before we take a look at the latest trend buyers and the key levels to watch on the major stock indices, the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 30 index, let's take a look at the disclaimer slides first. All right, so here we go. So let's take a look at we go through the CMC markets trading platform. So as usual, I will just take a look at the one of the growth proxy, which is the iShares Philadelphia Semiconductor ETF, stocks in short, to take a look at their medium-term trend so that we could actually have a kind of a bias or give us more confidence on the trend bias for the major stock indices that I will share with you all later. So that if you could recall that previously last week before the Chinese New Year break, we actually have a kind of a sideways bias, kind of a pullback first before a new up leg to actually take shape on this SOX ETF index. All right. So as you could see, based on last Friday's closing price, which is at 437.325, it has really surpassed the previous swing high level that was printed on 20th of Jan, around 4 weeks ago, at this 426.04. So all in all, what we could see is that this medium-term uptrend since the low of 28th of October 2020 has pretty much remains intact. So what we could see right now is that this is what we call the start of a new impulsive up leg since the low of 27th of Jan 2021, supported by a positive configuration as seen on its daily RSI index, inching up upwards from the 50 level, still hasn't reached the extreme overbought level yet, so which telling us that upside momentum is still intact and is not overstretched. So the next resistance level to watch will be at 4580 slash 46550. Breaking above should take us much higher towards 513.20 slash 517.80, with the key medium term support which are tightened to 2.30. So overall, what we could actually expect from the SOX ETF is that the medium-term uptrend is still intact and highly probability is skewed towards on the bullish bias rather than a bearish reversal from this juncture, which reinforce our medium-term uptrend scenario for all the major stock indices that I will cover later. So now let's take a look at the SPX 500 first. Let's go to the daily chart. Okay, so from daily chart, what we could see is that last week it continued to print fresh all-time high level, which closed in the New York session at 309.40 level based on last Friday's close. So it continued to shape higher high, higher low since the bullish breakout of this dotted line. What is this dotted line? If you could recall, is the major expanding wedge upper boundary, which was its resistance that kept previous upside moves since September on the 8th of December last year. Previously tested on 1st of Feb and also the 50-day moving average that's still upward sloping, coming to actually acting as a support at 3850 next, which is also the previous swing high area of 11th of Jan to 25th of Jan 2021. Daily RSI still in a positive configuration since the bullish breakout of this corresponding descending trendline resistance has yet to hit the extreme overbought level, indicating to us that upside momentum has yet to be overstretched, which actually give us the kind of a confidence or a higher probability move towards the 4100 level in the coming weeks ahead. So now let's go to the 4-hour chart for this week's strategy. Okay, so on the 4-hour chart, what I could do is that I would tighten the key medium-term pivotal support level to 3,850, looking for a further push up above 3,990 for to target the next resistance level in this coming week at 4080 slash 4100 level between this 1 to 3 week scenario. And however, if you start to see a 4-hour close below 3850, which could actually negate this bullish bias, to see a kind of another round of a choppy corrective down move to actually test this first of Feb swing low area at this 3640 level slash 3580 level. Okay, now moving on to the higher beta big tech heavyweight Nasdaq 100 on a US Nasdaq 100 index. Okay, so as usual, let's start from the, okay, one second, let me click on it. Let's start from the daily chart first. So daily chart, what we could see is that it really coming very close for our first upside target at 13,875, 8750. If you look at today's Asia session, it actually printed a high of 13,871, which is very close to our first upside target that we highlighted last week. So all in all, the 20-day moving average is still sloping upwards, coming now acting as a support at 13,500, which is also the former swing high area of 26th of Jan 2021. Daily RSI, similar configuration as what we see in the SPX 500. No signs of a, we call it a bearish divergence. Hasn't yet hit its extreme overbought level, indicating to us that the current upside momentum has yet to be in a kind of a overstretched condition. So for this week's strategy on the 4-hour chart, I will actually tighten the key medium-term pivotal support to 13,500 level, looking for further upside towards 14,100. Above 14,100 could take us much higher towards the next resistance at 14,435. So nevertheless, if we have a 4-hour close below 13,500, it will actually negate this bullish scenario to see another round of corrective decline to actually test this 1st of Feb 2021 swing low at 12,780 slash 12,500 level, which correspond to this previous range support of 21st of December last year to 6th of January 2021 this year. Okay, now moving on to the Hong Kong index. So as you all could know that Hong Kong today is actually still closed for a holiday. All right, it's still Chinese New Year holiday. This, okay, let me remove this so I can see more. It's still Chinese New Year holiday today, and it will actually reopen tomorrow. So what we could see is that since the low of 29th of Jan 2021 at 28,600, this Hong Kong 50 index has shaped a kind of a bullish, medium-term bullish reversal to actually last Friday actually retest that previous swing high, the 25th of Jan 25th of Jan swing high at 30,060 slash 30,280 level. So if we could go to the daily chart, let's go to the daily chart first. You could see this daily chart over here that the daily RSI has started to shape a bullish reversal as well from close to the 50 level mark from here, which is telling us to us that medium term upside momentum is rather very positive, or it start to shape in a bullish configuration, has yet to hit the overbought zone, which indicate to us that it actually supports further potential upside, which indicating indirectly telling us that there's a high chance, or in terms of probability, that this previous swing high at 25th of Jan 2021 is very likely to actually stage a bullish breakout at this level. All right, so with the positive configuration seen on the daily RSI, what we could do over here is that on the daily chart, on the 4-hour chart, on the strategy chart, we're actually now anticipating a potential bullish breakout from here. And if we could see that the way it actually try to actually evolves from the low of 30th of Jan, it start to shape a series of higher low and higher high. So what we could do that we could actually tighten the key medium term pivotal support for this week to 28,690, looking for a potential break above 30,660, 30,280 to see a further potential upside to target in the first step towards the next resistance at 31,600 level. Okay, so nevertheless, if you have a 4-hour close below 28,690, you actually invalidate this potential bullish breakout scenario to see another retest down towards 28,060 level, which is also the lower boundary of this ascending channel that is in place since 30th of October 2020 low. Now, moving on to the next Asia markets that I'd like to share with you all will be the Nikkei 225 or the Japan 225 index that we caught in our CMC markets trading platform. Okay, 1 minute. Do allow the data to load first. Okay, let me expand. Okay, so what we could see over here is that today the Japan market is open. Right now, it already surpassed the uh, yeah, psychological 13,000 level, 13K level, 13,000 level. Right now is trading at 13,070. So what we could see is very close to our the target of resistance that we have last week at 30,340 slash 750. Any signs of a medium term bearish reversal conjunction from here? To me, current price action does not say anything. This medium term uptrend still remains intact. What we could see is that the 20 and the 50-day moving average are still trading in a positive configuration, sloping upwards, supporting this ongoing medium term uptrend. Daily RSI bounce off from the 50 mark level mark, now hitting the overbought zone, but hasn't reached the extreme overbought level yet, which is recently at this level here, which is at 81. Also, no clear signs of a bearish divergence as well, indicating to us that this ongoing medium-term upside momentum has yet to be overstretched to the upside, and it still supports potential further up move from here. So how high can we go from here? Potentially the top of this ascending channel or major channel that is in place since March low last year, 23rd of March 2020 low, which is at 16,072 level, now stands at 31,350, which confluence with the a couple of Fibonacci expansion cluster level as well. Now, moving on to the 4-hour chart. Okay, before we go to the 4-hour chart, the 20-day moving average now is acting at support at 28,900, which confluence with the former swing high of 14th of Jan this year. So, all in all, right, in the 4-hour strategy chart, given this strong impulsive up move that we see today, I could actually tighten the key medium-term pivotal support to that 20-day moving average, which is at 28,900, looking a further potential push up towards 13,750, followed by 31,350 in the coming weeks ahead. All right, 1 to 3 weeks ahead. So however, if we see a 4-hour close below 28,900, it will negate this bullish scenario to see another round of corrective choppy decline to retest the 29th of Jan 2021 swing low at 27,500 next. All right, now moving on to the German 30 index from here. So what we could see, the German 30 index, it managed to actually shape a further a push up above this medium-term pivotal support that we have last week, if you could recall, at 13,700 level. A very nice bullish reversal after a retest on 1st of Feb, which is the former resistance of 20th of February 2020, now turned into a pullback support level, okay, which is the low at 13,300 level. Daily RSI also pretty positive, shaping higher low after a rebound from this corresponding pullback support, has yet to reach the extreme overbought level, which is at 76 level, which indicating to us that medium-term upside momentum is still pretty much intact. So on the 4-hour chart, no change given because the move is rather subdued compared to the rest of the other major indices that I highlight to you all. So I do not want to tighten the key medium-term pivotal support to this low, which is the last Friday's, okay, yeah, which was last Friday low, which is at 13,900 level. So I still maintain at 13,700, which also now confluence with the former minor descending resistance that is linking the previous high of 8 Jan to 21st of Jan, now turns into a pullback support also at 13,700. So still looking for a bullish bias for a further potential push up towards 14,315, followed by 14,620 level slash 730, then thereafter by 15,020 level. So if we start to see a 4-hour close below 13,700, it will be kind of invalidate this bullish scenario to see the revival of a corrective choppy decline to retest the 1st Feb 2021 swing low, which is at 13,300 slash 13,050, which is this range support or congestion zone lower boundary that is in place since 20th of November 2020 to 21st of December 2020. So to sum it up, what we could see right now is the yes, even though it start to hit a fresh all-time high on the on the major stock, on the major US stock indices, but technically it's still not showing any signs of a medium-term bearish reversal in the US stock market, and even in the Asia stock market that I cover that I highlighted earlier on, the Hang 50 and the Japan 225. And even though the German 30 is kind of more, the upside move is kind of slower compared to the rest, but it's still evolving in this medium term bullish configuration at this juncture. So all in all, I would still maintain this bullish scenario with a tightened key medium term respective key medium term pivotal support that I highlighted to you all earlier. All right, so have a great trading week ahead, and I see you all next in my next video.